The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me today. My name is John Needham. I'll be your host for today. And Frank, who is a real live wire, good morning, he says, sound and screener. Okay, thank you, my friend. You know, Frank, I'm a Luddite. And Luddites, the word comes from the people in Britain during the Industrial Revolution. All sorts of things were happening. New cotton mills were being designed and invented. And the Luddites were the workers, basically, who went on strike and to protest against new technology. And I got to tell you, I am a Luddite. In fact, I'm chairman of the International Order of Luddites, self-appointed, I might add, because my journey with technology started a long time ago. There was a stage in my life when I realized that one needed to know something about computers. So I went and I bought a computer. And I looked at the computer for 6 months, and it looked at me for 6 months, and nothing happened. It was an MS-DOS computer back in the day. Most of you won't have any idea what I'm talking about. Unless you knew the MS-DOS code, which I didn't, nothing happened. And so it wasn't, in fact, until Windows came out and at least gave us a picture I could click on to stir some life into it. So anything to do with technology, treat me as a total imbecile, which is about right. Okay, well, what a wonderful, wonderful day to have you all with me, folks. And all our usual friends are here. It's so good to see you all. And a few we don't see too often. Ahmad's with us today. And Ahmad is a gentleman in London. So I guess it's pretty much the middle of the night over there. So good effort being here. Wonderful to have you with us. And Ahmad is a very interesting person. He's in the process of finishing off his various Danielcode tutorials. And he's done very, very well. In fact, he's right up with the absolute top tier for our standard test, which is natural gas for calendar 2016, as chosen by Mark L., who's with us today, and is the reigning champion. Ahmad got something over 1,000% on margin in his paper trading. And while we know Mark L. has done that before, and one or two others, what's different is that Ahmad doesn't use charts. He turns it all into Excel code in a spreadsheet. You'll think I'm kidding, but it's amazing, absolutely astonishing what he can do with Excel. He's doing very, very well. So glad to have you with us, Ahmad. Wonderful. Okay, Chase is with us. Thank you, Chase. David's with us. Plenty of Davids, 3 or 4, the other Davids. Yes, Frank's with us, of course. He was on the ball. Gabe's with us in California. Good to have you with us, Gabe. George, of course. Greg, who is a master trader and a wealth manager now, sort of semi-retired. We're not quite sure where that position all is with you, Craig, but it sounds fun. Justin, of course, is our testing machine. Justin is a gentleman. He lives in the Hunter Valley, which is the equivalent to Keeneland, if you like. It's where all the big horse studs are. Beautiful, beautiful country. And Justin's a very interesting character. He's very clever. He's a young man and married, 1, maybe 2 babies now, I think. And he's got a very interesting story. His father, Hank, who's been a friend of mine for many, many years, was a Danielcode client. And learning to trade. And he talked his son Justin into joining the Danielcode, which he did. And then, as he says himself, he heard somebody mention something about a psalm, and he ran away in horror and in fright, which is a common reaction, which is just not necessary when you understand the revelations of the truth. But that's what he did. And I think he took the deep dive into researching the Danielcode. He's admitted this to me, that he wanted to prove that it was a false, that it was a fake, that it was a scam, and save his dear father from spending any money on his subscriptions. Well, what he's found, of course, is he's found more about the Danielcode than any person in the world, including me. And if you look at the 4 prominent videos on our homepage, number 4 is Justin doing his research for us and doing his research for himself, but then sharing it with us, I should say. Justin's with us today, incidentally. Welcome, Justin. It's very wonderful to have you here. And what he found is that he tested the Danielcode time trading over all the markets he could possibly find, many, many, many markets. And in total, he put together more than 100 years of back testing, which doesn't mean he's as old as Methuselah. It means that he did 1 year for some markets, 2 years for some markets, 8 years for some markets. And in total, they came together and they created more than 100 years equivalent of back testing. And he found the average, sort of 450 to 650 percent, that's 450% up to about 650% on margin as the average. Now, he also found out that in all his testing, he said he's never found a losing year using Danielcode time testing. So pretty sensational stuff, and wonderful, wonderful to have Justin with us. And I'm going to talk about Justin a bit later on. He's got another project that he's doing for us, which is very, very exciting, and it relates to the Beyond Masterclass tutorial, which is available in the full one-on-one version with me, or on our new TTT, Teach Yourself to Trade video series. Mark L's with us, of course. Mike's with us. Oh, there's Mike. He's a Kiwi. There's another Mike. There's 3 or 4, 5 Mikes. Lots of Mikes. Norbert, who comes from the coal country up in Canada. Really seriously cold country up there. Norbert, how grand to have you with us. He's a tutorial guy. Rolf is with us. Rolf's a Kiwi. He lives in Melbourne. Lovely chap. Been with us for years and years and years. And he's just started his TTT video tutorials. Vicky's with us. Wonderful to have you with us, Vicky. And Wanda is with us. Wanda, new name. I know your surname well, but glad to have you with us. That looks to me like here we are, if I'm right about this. We've got 3 ladies with us today. We've got Vicky, we've got Wanda, and we've got Melissa. And we don't have many ladies, so we're very happy especially to welcome you whenever you are with us. How wonderful. So, lots to talk about today, folks, so let's move along. And here we are. So, this is the introduction to today's webinar, and it's really interesting. I'm an attorney, so I'm an aged attorney, which is even more important. I'm careful with the words I use, but what actually happens in this giant trading market is largely a smokescreen. In fact, my personal view is that it's a giant scandal. And the push to be an investor or trader in stocks and buy a derivative version of that, the push is for stocks in particular, is endless. And the governments all over the world, states, Australia, many countries, they give you very decent incentives to be invested in stocks. Now, stock markets form a vital function in terms of raising capital. But when you have a look at their performance on an objective basis, it's woeful. And trading is basically easy. Markets can only move 3 ways, up, down, or sideways. And if you can tell when a sideways correction is starting, which you will know if you've done the Beyond Masterclass tutorial or the TTT version of it, then your choices are down to two. It can only go up or down. And it is basically, if you understand trading, it is simple. But look at these results. I found all these in a publication called Institutional Investor. And I asked them the simple question about, tell me about the best hedge fund in 2024. Well, the first thing you need to know about hedge funds is almost without exception, the exception being Citadel, which is by far the standout hedge fund in the world, but bar the odd exception, hedge funds don't hedge. They're long-only investors, so they make money when markets are going up, and they're going to lose money when markets go down. And we may be about to see some of that right on our front doorstep right now. But if you ask the question, the top 20 firms, now remember this is the top 20, most of them are closed. Many of them have been returning money to investors over the years. Citadel certainly does. You're not going to get into any of the top 20, let me tell you, but take it as read that that's what we're talking about. The top 20 firms generated asset-weighted returns of 13%. Okay, you got that? Asset-weighted returns. In other words, what was the return on investment? And that's why I always say that futures returns should be quoted as a percentage of margin, because margin is the absolute minimum investment that you need to make to be able to trade derivatives. And on exactly the same measurement basis, as I just told you, Danielcode time signals average 450% to 650%, up to as much as a bit over 1,000%. Mark L. And Ahmad and a few others are with us. The 13% is, you've got to look at the fine print, and you've got to go down about 4 pages on the institutional investor to find that number, because they are very well aware of it. That's their business, covering hedge funds and other investment tools. And it always starts off, I've seen this go on and on over the years, with how much money the biggest firms made, how much money they made. Aren't they wonderful? Well, they're wonderful in terms of a large amount of funds generated for the best of them, but when you ask the question, how is that as a percentage of assets or a percentage of funds invested, they don't want to tell you, because it's dreadful, it's dismal. And on page 4 of that report, you'll see they finally get around to saying the top 20 hedge funds made 13%. As well as that, costs, what they charge you guys, and have gone rocketed in the last few years in particular, and they're now about 33%. That's the fees, and in fact, the fees of the top 20 hedge fund managers came to 34.3% of the gross gains, according to Institutional Investor. So if you were lucky enough to be in that top 20 hedge funds, which you'd be very unlikely to ever get into, you've got to take away 3.5% because that disappears in fees. So they're talking about 9% plus or minus return on investment. And at a time where the interest-free bond rate, you can get 4.5%, 5.5% without really having to ask too hard. That net return is 4% additional against a risk-free asset. Bond, of course, being the government and being risk-free essentially. And you are getting a 4% premium for that risk, and that doesn't sound to me like a lot. When you get down to the next level and you have a look at what the average hedge fund, which people like you and I, if we wanted to be in a hedge fund, that's where we would be, they returned 8.3% for 2024, which was a massive up year. After an early few months of correction, it was all one-way traffic, and it was massive. The futures contract alone was up 33%. So Take your 8.5%. Now take away your 1/3 of that is fees. So what are you talking about? 5%? 5 and a bit percent against a risk-free return of that at least, maybe more? It is absolutely appalling. But you're never going to hear about it. And as I've said here, if one of you were my students, if you were making 13% a month, don't worry about a year. If you were making 13% a month, call me because you're doing something wrong. I would expect you to do much, much more than that, and that's a month, not a year. But this is an industry that's lionized daily. Print, radio, TV, whole channels are dedicated to the minutiae of share trading and investing. Great newspapers, Wall Street Journal, Bloomberg, Financial Review, they survive on a diet of this stuff. And to me, it's because the truth never comes out. And the people who cover these markets, for example, Institutional Investor, one of the very, very well-known publications, they make sure they put those percentage returns on page 4 in pretty small print. It is pathetic, and it is disgraceful, and nobody comes out and tells you that. What that business is very, very good at is creating multi-millionaires. But that's not you. That's the guys. They're the managers and owners of the equity and the fund, not you. You're not going to get rich being in a hedge fund, I can promise you. If you are serious about your wealth and you want to find a way to make a lot of money safely and in a profitable, legal, quite acceptable manner, learn to trade Danielcode time signals. It's all there. It's available for you. We have a number of different programs. We have a one-on-one program with me that'll take you anywhere from 6 to 15 lessons. Depends how quickly you grab it. I think Gabe was on lesson number 16 and doing much better now. Or you can take a video called TTT, Teach Yourself to Trade. It's our new video course where you don't have to talk to me unless you want to. But if you want to, I'm happy to tell you how we can wrap things up. These 4 videos are on the front page of the website for a reason. Please take 20 minutes and listen to one of them. The first one is from Mark L., who's with us today, and Mark's always with us. No party without Mark. And this is him talking about his paper trading of 2016 natural gas. Video 2 is Amy, and I can't remember the boyfriend's name. I certainly remember Amy. She's an absolute delight. Never seen a trading chart in her life. She talking about her paper trading as she's doing her tutorial. 400, 500, 600% on margin. Mark L is at 1,032% on margin. If you don't think it's possible, have a look at that video. Mark's an engineer by profession. He's retired now. Very methodical, very exact, very precise. Have a look at it. It's amazing. Video 3, this is Justin. This is his trading. Seeing is believing, 500% in 10 months. And then his video 4, same guy, Justin. I never had a losing year. In that, he's gone through every futures market you can think of, including Forex, every derivatives market you can think of over years and years and years. Take 20 minutes. Watch one of those videos. I believe it will change your life. So, if the general run of trading options available through CTAs, hedge funds, whoever you like, if that's not right, if that doesn't work, and it only works in my view at the margin, given the prices, the fees they extract, then what does work? So historic time cycles that are based on our natural laws are what works. And by natural laws, I mean really simple stuff like the length of a calendar year, the length of a month, the average length of a month. It's called a synodic month. All markets are controlled by these Danielcode cycles. Take a look at our chart archives at the Danielcode website. You will see every member's chart that I've created, and there's about heading towards 50,000 individual charts now, all of which have been created by me manually. You will be hard-pressed to find a market that has ever turned anywhere except at its Danielcode target. And talking about time cycles, we believe the historic bull market that's been running since March 2009, we believe it ends in 2025. And if you click on the articles tab, you'll see the latest article from Frank DB, When the Music Stops. Frank is a most delightful young man. He came and did a Danielcode tutorial at Taupo, New Zealand, with me way back in 2011. And he had his fiancée with him, Anne, absolute delightful young lady, now the mother of his children. They're married, a couple of children. And he said, I've never seen a financial chart, but I like your articles. I used to write a lot for Financial Sense and Forex Journal and what have you. He said, will you teach me how to trade? Well, I taught him how to trade and a bit more as well, because that was the first year that I taught the fourth seal. Or the fourth degree, if you prefer, which is our forecasting method. And Frank took that to heart, went away for 3 or 4 years, worked his fingers to the bone, came back and said, I've done nothing else except work out time cycles, learn and teach myself everything that I could. Could I write the fourth seal commentary for you? And he does. And he's been doing that for a very, very long time. He's a very, very clever young man. But there's his latest article. It came out in January 2025. The one before was me. January from Frank. You should read that and look what happens here with us, with Danielcode. We give you the whole gamut. We start off by telling you the long-term prognosis for the key markets. We tell you what they are doing now and what are the probabilities of what they'll do in the future. Now, bear in mind, we are always trading probabilities. There are no certainties in trading, the same as in life. It is about probabilities. But some of these probabilities become very, very high indeed. And this is his fourth seal commentary on what's been happening. We tell you that. You can subscribe to that. You just go to the services tab at our website. You can just click a button and subscribe to that with PayPal. Frank covers crude oil, S&P, and gold for us. Gold, most importantly, very, very popular gold, not only for investors as a long-term store of wealth, but also as trading. And it's a pretty sensational market, let me tell you. So what Frank's analysis has been is that we've been expecting a high, looking for a high, and we got the high. Now, the short version of Frank's January article is there are 3 time cycles in this calendar year for potential highs and 3 cycles this calendar year for potential lows. One of them has just happened. It was upon us. So it didn't do what Frank was looking for it to do. And his comment is, as you saw, there will be a correction. There will be more highs, higher highs as the year goes on. I just want to give you one caveat with that. Those of you who obsess about markets like I do, I mean, quite frankly, if I'm on holidays and I'm not sailing or swimming, I'm looking at markets. I'm looking at charts. And those of you who design trading systems will be well aware that one bar immediately reversed can sometimes be forgiven. So don't write off entirely the fact that we may have already had the high. Frank says we haven't. He's our guru, and you should be aware of what he's saying. I'm simply offering you a caveat that in my many, many years of trading, creating trading systems, etc., I have found that a signal that immediately reverses which is what this last high has done in the S&P and equities, can sometimes be forgiven. That's just a little caveat, just keep a note there. So how have we been going? Well, if all of that trading by hedge funds, whatever goes on Squawk Box, CNBC, Bloomberg, the rest, if that's all rubbish, what is good trading? What is honest trading? Here it is. This is what we do. And it has no resemblance to anything like a hedge fund. And this is, I'm going to show you how often does this happen? All the time. Don't tell me you've got some guy you know who said he's got 85% win rate over many, many years. I'm not interested in that stuff. It's rubbish. It's marketing. It's, I don't want to say a rude word, but you know what it is. What matters with trading is not the win rate on its own. It is meaningless. I can show you a trading program that returns 92% win. It doesn't make much money because it has so many filters on it. It doesn't trade very often. That's the first thing. And the second thing, it's so obvious. And obvious moves in the market fail. The market doesn't like obvious moves. Have a look at this. This is the NASDAQ. We've been sprouting about a high. And you can see this market spent 3 days. It created its TO3 sell signal up there around those two blue lines, 22,247 and 22,226. And it was just bouncing between them, and then on the lower one, then on the upper one. It was spending 3 days of its life, including go back 4 bars, the one before that had its high right at 220, 226.50. 4 days screaming at you, this Danielcode number was important. Now, we don't just tell you about some vague idea of a resistance or support. We show you the number. We publish these charts. As I said, there's almost 50,000 of them. They're all there under chart archives. You can see them. Go ahead. You'll see the work of my life for the last 20 years. Look at this. TO3 plus sell signal, straight down. $30,000 per one contract. Now, remember, everything I'm going to show you is always per one contract. And it's misleading because some of these markets, like wheat, have quite small margins. So the numbers don't look so impressive, but they are right up there on the percentages as a percentage of margin. Other markets have pretty big margins. This is one of them. And the number looks big, but it's an expensive market on margin. Anyway, easy enough for all of you guys. There was our TO3 plus sell signal, all the way down $30,000 at today's close. Here is the S&P. We had the same thing. We had a TO3 sell signal right at that 61.66 high. So, as I say to you, this is not stuff that's thereabouts. This is specific. This is accurate. That particular high there against that blue line, the high of that bar was 6166.50. What was the blue line? 6166.50. Been on that chart for weeks, maybe months. Zero variance. That doesn't happen very often, but we only allow a very small variance anyway. Less than 0.1% is what we allow. That's not 1%, that's 1/10 of 1%. And the reality is that these markets work in a much tighter range than that. And you can see after this particular trade, we had it in 2 bites. We had 5,000 odd in the first leg, and then a little 1 bar counter trend, and another $3,400 down. So I put a little fail sign on the 1 bar counter trend because we had a buy signal there which was elected and failed. How big is that fail? What is it worth? Well, let's have a look. Not entirely sure it's on this computer, but it should be. No, it's not. Oh, here it is. So on the S&P, on the counter trend, we use, because we know that counter trends fail more often than direct signals. They have a much higher propensity to fail. So we don't use our normal risk. We use 50%. of a 29-day ATR, average trading range. For this market and in this little rally up there, it went up about $600. And then when it reverses, because we're using a trailing stop, you get stopped out basically a couple of $1,000 less than that from the high, and you've made $500. So there might be $1,200-$1,400 in that loss. Doesn't mean much compared to your other wins, does it? Look, 5,600 in one trade, 3,400 in the other, and a flip me sell sitting there, which we post on the website for you. As my Kiwi friend Mike says, he goes absolutely nuts over the flip me signals. He absolutely loves them, as he does. Okay, here's the next chart. I'm running the equities for you. Here's the Russell. It was on a TO3 sell signal. Straight down, one counter trend, one bar counter trend, and down again. 4,200 the first time, 1,000 the second, and a small loss in between. Now, if you've learned about Beyond Masterclass, it does 2 or 3 things. The first thing it does is it tells you when it's safe to use a 2-bar, 3-bar, or greater stop. In other words, it tells you when it's safe to relax your stop loss regime, which with us is basically a 1-bar stop, and go to a 2-bar, 3-bar, whatever you like. It actually tells you where to put your stop. All of these, both these markets, S&P and the Russell, have created their Beyond Masterclass signal that it was safe to use to loosen off your stops a little bit, give the market time to move and breathe, and that's where it is. So let's move on. Crude oil, I'm showing you all of our charts except soybeans. Soybeans are still having a bit of a think about what it's doing. I'm going to show you every other future chart. I'm then going to go on and show you all of our Forex charts, with the exception of, I think, one market we cover, 9 Forex pairs. I'm going to show you the trading we've done this week in 8 of them. Here's crude oil. We got a TO3 and a blue line buy signal for crude oil today. That was elected, and up it went. What's interesting about that? Well, have a look at the setup bar. The low of that setup bar is 68.36. Have a look at the blue line that I'm showing you there, 68.43. 7 ticks variance. That's it. In fact, there's one that's 1 tick higher, so let's say 6 ticks variance. That's it. That's how accurate these charts are. That's how accurate these signals are, because they all start with one thing, which we call target recognition. They have to find the target of their bar, high, low, or their close within 0.1% accuracy. And that happens with Danielcode all the time. As I say, there's 50,000 charts for you to go and have a look at. Moving on to gold. This was the 4th seal comment on gold. As I say, we tell you at the Danielcode what's happening in these markets, what they're likely to do, and then we give you the daily charts with the daily trade signals on it. Have a look at Frank's comments for this week. He said the 59 cycle top gave us the closing high, but the fact that gold kept trading close to the high is bullish. There's an 89 cycle top, coming in on Wednesday. Let's see if that signal has more power to force gold into a correction. The daily DC, that stands for Danielcode, signals will guide us. Well, here's the chart. TO3 and blue line sell signal, sitting there smiling at you. And that was finally, it had been having a bit of a flirt with that number for a while, as you can see. Same as you saw with the equities. This market's been testing that number from 29.68 up to 29.74 pretty much 4 or 5 occasions since February the 11th. This final signal came on Monday, the 24th of this month. That high, 29.74. Have a look at the blue lines, 29.74.2. 2 ticks variance. In a number like 29.74, there are 10 ticks to a point, so there's 29,000 ticks at that number. Danielcode gets it accurate to 2. 1, 2. That's it. There's your sell signal, $5,000 odd straight down. Very nice, isn't it? When did that happen? Well, that high came in on Monday. The big move down was on Tuesday. Frank said expect it on or before Wednesday. Pretty amazing? I think so. I really do. I have to tell you, folks, that I've been doing this Danielcode in one form or another for over 30 years. My daughter is now 30 years old. I can't believe I'm old enough to have a child that's 30 years old, but I am. And I was trading futures before she was born. And now she's a doctor. Wonderful, lass. Anyway, moving on, here's silver. Remember, silver and gold are highly correlated. In fact, they're so highly correlated that a trade in any one of them can be executed in the other, provided the trade is elected. By elected, I mean that all of our trade signals, which you can subscribe to, TO3 signals, TO3 plus, you can subscribe to the daily signals or whatever you like. The more you see, the more informed you'll be. This lovely little trade here, $7,700 or thereabouts. Amazing, isn't it? It came on a correlated TO3 sell signal. What do I mean by that? There was a sell signal on that day for gold, and as silver is so highly correlated with gold, the trade can be taken in either of them if the trade is elected. By elected, I mean all of our orders that we create are conditional orders. They don't mean anything until they go to a specific number, which we set out in our trade program for you every day. We say entry number goes here, initial stop goes there. Okay? All trade signals are conditional until they are elected, or you would say filled. We use the word, excuse me, elected. Here we are, big trade in silver, 7,700. With wheat is a little wonder. Have a look at this. It's a comparatively cheap market, and it's a very logical and precise market. I trade wheat a lot. Here was its sell signal, exactly the same as I've been telling you. Blue line at 620, correct 6, something like that in wheat, and got the sets up the signal, and where does it go from there? Straight down. That particular high was 621, correct 6. The blue line was at 620, correct 6. 1 point or 4 ticks difference. That's it. Pretty amazing, isn't it? The bar before it was on a blue line as well. As I say, a small contract, but $2,200 straight down. Lovely stuff. T-bonds, US T-bonds. We're long T-bonds. It's on a TO3 buy signal. And at the close, it was $3,000 odd in credit. And pretty sure we're going to have a sell signal today. I can't quite remember. I haven't posted them yet anyway. That was that. There you are. And the two I haven't showed you. One was natural gas. One was soybeans. Soybeans are still having a think about it. Natural gas is a very interesting situation. I wanted to show you how accurate these markets are. They have a life of their own. They understand where the Danielcode numbers are, and they work to it. The initial low there you can see was at 3.875. There's a little red number against that, which may be hard for you to see. We find this one here. There it is. It's 3.879, I think. It might be 870. One or the other. The low was 3.875. Very close, wasn't it? Have a look, and that sets up a flip me sell 2 ticks below that bar. And what was the low today? 3.878. 3 ticks above that trigger point. That would have triggered the sell signal. Okay, markets do this all the time. They are this precise. They are this accurate. They are always this precise. They are always this accurate. If you're talking about zones of support and resistance, you're wasting your time. Zones are only for people who don't know how to trade. The numbers we give you are specific, accurate. They're published, and usually many days beforehand. This is Germany's DAX, and I'm going to be interested. We're short, well, I would say I'm a bearer today. I'd say pretty disappointing today. And I'm showing you this because there's now a new mini DAX, which would be much more tradable for many of you. And you can see this thing just moves like clockwork. 29,000 up, 8,000 down, 2,600 across, 2,400 today, or thereabouts. And it's working largely on correlated TO3 signals. And that's because all of the equities, the US equities, Russell, Dow, NASDAQ, and S&P, and Germany's DAX, are so highly correlated that a trade in any one can be executed in any other. So if you had a sell signal in the S&P, you could trade that in the DAX. And that's what a correlated signal means. We're going to be talking to a few people in Northern Europe pretty soon because of a delightful gentleman I met last week, Brecht, who may or may not be with us today, but it's delightful anyway. Gig joined us. A few others have come in a bit late. Here we are. Anthony's with us. He's used to be a broker in Chicago, now a private trader. Good to have you with us, Anthony. Many more Deans with us. Oh, good to have you with us, my friend. Yep. More here. A few came in late. Gig, wonderful. Good to have you, Gig, of course, always. And Chip's with us. Haven't seen you for a while, my friend. Hope you're trading well. If not, let me know. We got here, of course, Melissa, lovely Melissa. Welcome, Melissa. Here we are, more. Rob H. from New Zealand, a good mate of mine, very knowledgeable trader. Good to have you with us, my friend. And a few more that came in a bit late. So I thought I'd just publish this Bitcoin chart for you. It sold off on a correlated TO3 sell signal. But look what happened before it. You got 14 bars of sideways movement. And I put a sign on it saying, no momentum 2 bars. I've been talking to you over the last month or more about these amazing momentum bars and what we're learning from them. This whole study of momentum bars is something I've been doing for 20 years. I've been observing them with interest for 20 years and finally came up with enough good information to let you share it. And one of the things that the Beyond Masterclass tutorials will teach you is when consolidations are starting. And by the 4th bar into this consolidation, you should have been screaming at yourself, this is a consolidation, get flat. Okay, and wait for the breakout. There it was. Pretty obvious, isn't it? I've talked to you about that at length about momentum bars lately. Okay, so I wanted to share that with you. And I want to tell you about something wonderful and exciting that's happening with Beyond Masterclass. And this is some work that's being done for us by Justin, who's a wonderful young man. And he is no doubt the world's greatest back tester, as I told you. He's taken the Danielcode time trading program and run it over every derivatives market, including Forex, that you can possibly think of. Incidentally, if you're a Forex trader, don't go away. I'm going to show you some Forex charts in not too distant future. What Justin does, he's been so kind, he undertakes massive amounts of back testing for us and comes up with some wonderful ideas and some wonderful particular patterns that are exciting to him. And Justin did the Beyond Masterclass tutorial with me a month or so ago, and he's been exploring it for us. And what he says that he was looking to see, refine the existing rules, see if more could be squeezed out of them. But he found one set of rules that stood out to me and looked fairly promising. And he goes on, he tells you what it is. I blocked it out. I'll tell you about this if you've done a Beyond Masterclass tutorial. Once this research from Justin is finished, we'll catch up with you and give you a private session to catch up with whether you've done it personally with me or through the TTT system. Look at what happens at the end of this. some random results from the markets I've tested so far. One market went from a 700% return on margin, that's using the Danielcode daily time signals, to 1,050%. And another went from 400% using the Danielcode daily time signals to 1,550%. It's mind-boggling. It's staggering that this new little thing called momentum bars is opening us up to seeing these sorts of opportunities. And Justin, everybody here is so grateful to you for the work you do for us and that you share. Wonderful, wonderful stuff. So keep at it, my friend. And I'm looking forward to seeing this. It's a thrill. Incidentally, I've been working on something similar on the other set of tools. You're looking at one set, you got two. This is the other set of tools. Something similar in there is pretty interesting. Okay, so that's what's coming to you now. Forex. We are actually a Forex trading business. I actually started off as a Forex trader. So did Greg Palladini, who I'm sure will be with us today. And over the years, I've become predominantly a futures trader, but we still run Forex. We have lots of Forex traders with us. And I'm going to tell you a bit today about Forex because I'm usually remiss and I don't tell you much about what's been happening in Forex. And that is because Trade Navigator do not have intraday data for Forex anymore. Obviously, the number of Forex clients has fallen dramatically, and they don't think it's worth running their intraday data. So given the time cycle I'm working on, which is usually 3 or 4 o'clock in the morning to get this webinar ready for you, those charts just aren't available when I want them. But have a look at this. This is a really, really basic. This is the euro, and along the bottom you can see there's a Danielcode time cycle. That's the 29-day time cycle. And we're interested in time cycles when they expire. And when they expire is when they're at their maximum level, which is 100. And that can be for 1 or more days. So this is a chart of the euro, and excuse me, it covers 2 years and 7 months. That's as much data as I could put on it. And it starts before July 2022 and runs up to February 2025. So it's about the last 2 years and 7 months of trading. Simply looking at the basic time cycle, those of you who've done a tutorial will understand that the first number you find for the Danielcode is a time cycle. It's a time cycle of 29.6 days. So you don't have to worry about any of the numbers after the decimal point in trading because there's 29.7, almost 30% of the daily bars are not even on these charts. They're weekends and US federal holidays. So you've got a systemic error of close to 30%, which should impact these markets, and undoubtedly it does. But time goes on regardless of the market. The time doesn't end on Friday when the markets close. It works all through the weekend, and it keeps on working non-stop. So we have to be aware of that. It's very, very interesting the way that the markets can adapt to that. But just having a quick cursory look at this chart, what you have to say is that every significant high has come on a time sell signal, a Danielcode time sell signal. Every significant low has come on a Danielcode time buy signal. All of them. And if you wanted to use a shorter time frame, you would pick up all of the smaller swings as well. So we actually have clients who trade the 29-day chart, particularly gold. They love it. We trade much shorter than that, but to let you get a start of an understanding of how time cycles work, I wanted to show you how incredibly accurate it is. Here you are, euro, 2 years and 7 months, every significant turn at an expiring time cycle. Okay, this one is gold. This is the same story. This is 2 years and 7 months of gold. It runs from July 2020 to June, late May 2022. This may be, yeah, that's about right. Yeah, 2021, maybe a little bit shorter, a little bit more spread out. And it's showing you exactly the same thing. Very importantly on gold. Gold is one of the most complex markets to trade, and there's a reason for that. And the reason is commentary. There's a continual background of ranging from murmuring to screaming from the gold bulls and particularly the people who trade bullion. They have a vested interest in having you excited about gold in the hope that you will go and buy some gold bullion from them. But it's a market that draws huge amounts of commentary, and of course the markets that have the most commentary become the most complex because there are these underriding smaller waves of comment hitting you all the time. This chart is there to show you that it makes no difference. Every single high and every single low of any importance has happened at a Danielcode 29-day expiring cycle, without exception. And that's where we start when we're talking about trading time. Remember, time and price are the same thing on different axes. I've been saying that for 20 years. I don't think anyone believes me even till today. But you can prove that because what we do is we take these Danielcode time signals that come from the originating document from which we find the Danielcode, and we convert them into price signals, into price lines. In other words, time signals are vertical up and down the page, horizontal price signals are horizontal running across the page. And we take these time cycles and we convert them into price. And markets go to those numbers all the time. That's why I'm telling you there's 50,000 members charts there for you to look at. It is very, very hard to find one market that has ever turned anywhere except at its Danielcode time cycle, which, don't forget, time levels, time numbers of time create price. They're the same thing on a different axis. So this is our European connection, folks. I had a wonderful chance to meet a gentleman called Brecht Arnott last week. He's a European. I think he's Dutch. And he hosts a community website called safecapital.eu. It's written in Dutch, but it has links to Google translation. And Brecht is a very seriously smart operator. He's a very knowledgeable man. And his website is stacked with important material. I came across Brecht because he interviewed our time forecasting guru, Frank DB, and some of his members took up the 2TCT video training. So I will be a guest of Safe Capital at their webinar in March. I think it's March the 19th, but keep an eye on their website that you can find there at safecapital.eu. And they have this mantra. They go on, you can find this on his website. It says, but then we teach them what real capital is, our connection to spirit. Everything we do is to teach people to go inside and find their true capital there instead of going for the dangling carrot in the outer world. Well, I don't know Brecht well enough yet. I will. But right now, my guess is that he would consider here he is. Frank knows about this. Brecht is Belgian, as is Frank DB, of course. Thank you for correcting me, Frank. He's not Dutch, he's Belgian. There you are. So think about this as a concept. I find it very interesting. Go inside and find your true capital. Everyone knows how long a calendar year is. Certainly everyone knows when the new year begins. The Western world knows we have 12 months in every year. The moon completes 12 full cycles of its phases in every single year, but it's about 354 days. So every 2.5 years, the difference adds up to an extra moon, a 13th full moon occurring. They're relatively rare. Before the Gregorian calendar, most countries, most nations were using moon cycles. That's what we used. So the Gregorian calendar is quite recent in our long history. You all knew that 12 months in a year gives an average length for each month of about 30 days and a couple of decimal points. You find that out simply by your knowledge that you have 12 months of the year and 365 days, divide one and the other, there it is, 30-something days. A more accurate measure is what's called the synodic month. And the synodic month is a measure of planetary cycles. It happens when the Earth, as you know, is rotating around the sun and the moon is rotating around the Earth, and that in these various rotations at some times the sun and the moon are on the same side of the Earth. At other times, they're split. The moon will be on one side, the sun is on the other side. When they're split, the various gravitational forces are competing. When they're aligned, the gravitational forces are going the same way. They are in agreement. That synodic month, quite clearly and simply, is how time is measured. And the more accurate measure for the synodic month is 29.6 days. That's the Danielcode number. That's the first number we find, years before I even knew what a synodic month was. But also remember, time varies. This hour is not going to be the same as the last hour. And this hour is not going to be the same as the next hour. Because of these various bodies that are running along their cycle path, I can put that much more elegantly, they are running on elliptical orbit, but it's got wobbles in it because the Earth and the Moon are not perfect spheres. They are spherical, but they got some rough edges. So they wobble. And it's that wobble that creates different time. So in the same way as this hour will not be exactly the same as the last hour, so it is with the length of a synodic month. And if you go to Wikipedia, it will tell you the length of a synodic month is 29.5 days. We have it at 29.6 days as time varies. Some years ago, 2011, NASA Jet Laboratories did an analysis of the synodic months, and they found that the synodic months themselves during the year vary from 29.3 days to 29.7 days. So if you had a number at 29.5, you'd be correct. At 29.6, you'd be correct. At 29.4, you'd be correct. Time moves a little bit. And this is the knowing the length of a synodic month. That's the beginning of your trading knowledge. Pretty good stuff, isn't it? You've seen this letter. This is from Frank, who's with us today, incidentally. He's done his tutorial at TTT, started on his TTT course, and he was kind enough to write to us about it and tell us that he thought it was amazing. You can see what I've underlined at the bottom. Danielcode really changed my life. Life-changing even without the trading. It is really serious stuff, the Danielcode, folks. I do suggest you immerse yourselves in it. You will be a better person even if you have no interest in trading. Here's another couple. This is from John, who is also a Safe Capital guy, as was Frank. Who came to us and has done the TTT trading course. This is what he did with natural gas 2016 paper trading. He's right up there, isn't he? Tell me that. It's a net profit, $26,160 on a 3,200 margin, 817% on margin. Pretty good, isn't it? Okay, here's one he did. This is actually the micro gold contract that he did as part of his paper trading. Something in here very interesting that I talk to you about often. This particular piece of market chart, and it doesn't mean it'll all be the same, this can change, and it does change. The win rate is 44%, which is low. we claim our win rate is 52 to 62%. 44% is low, but look what it does to your profit. Nothing. The profit on margin from this bit of trading with a low win rate was 643% on margin. Okay, it's not just the win rate that matters, it's the size of the average win relative to the average loss. That's everything. And you can see here that the average win to the average loss here is something like, I know that 400 odd percent, 380%, something like that. That's what makes the money, and that is Danielcode. Okay, now, I know we're running out of time, folks. You just have to bear with me today. Teach Yourself to Trade video series. Don't leave. We've got Forex coming up. You've seen this. I'll leave it there for a few sessions. What the five lessons in our TTT course are. New lesson number 5 teaches you about these momentum bars I've been talking about. And it teaches you, among other things, when it's safe to use a 2-bar stop or even a 3-bar stop. It also tells you when a consolidation or sideways move is starting. That knowledge alone, if you can avoid those consolidations, and I've seen the little horrors run up to 36 days at times, if you can avoid those consolidations, your profit and loss, your P&L, will be much, much healthier. Okay, we're still making the Danielcode Masterclass tutorial available. That's one-on-one with me. I tell you about this all the time. There's a link on the website there. You can go and see the curriculum. Basically, it teaches you everything worthwhile that you need to know about trading futures and Forex. I want to quickly show you these 6-day charts, which we do for our super Danielcode website super subscribers. This is a 6-day chart. What's amazing, as I've been telling you, is every bar on this chart is created with 6 trading days. So you would expect them to be not as accurate as a daily chart. In fact, they are at least as accurate as a daily chart. They're extraordinary. And if you want to know where the next turn is going to be on these markets, look at these 6-day charts. You've got a key reversal bar in oil right at that number, at the black line. Very, very accurate. Here's the S&P. It's had been testing that high number around 6160 for a long time. It's had 3 major goes at it. Nobody said this yet, which amuses me, because years ago everyone would have been screaming, 3 little Indians, 3 little Indians, 3 little, or sometimes it's called 3 tops. 3 highs is a topping pattern back in the day before computers, when people followed patterns. Look at this bar, this chart. It's tested that number twice. Then it's got what we call a false break. It's just stuck its head through and reversed immediately. And fast moves come from false breaks. Here's gold. It's just put in a false break itself at 29.69 plus a bit. And it's in the process of correcting. Here's UST bonds. This market is incredible. It is accurate pretty well to 2 or 3 or 4 ticks everywhere, up and down both ways. So if you want to know the next number, it'll be one of these. Get them, write them down, watch it happening. It's extraordinary. Now, Forex, we have to be fairly quick because we are a full 5 minutes over time so far, folks, for which I trust you'll forgive me, but I haven't had a chance to show you Forex recently. Forex is trading wonderfully. The volatility in the US dollar index has really set it alight. This is Aussie US dollar. TO3 sell signal exactly at its number, 6409. I know I drive you mad trying to get through to you how accurate these things are, for the reason that nobody else does it. Nobody else can do it. That high that's got the TO3 sell signal created, that number, that high was 6409. Have a look at your blue line, 6409. 0 variance. How often does that happen? All the time. Often. Very often. Within a handful of ticks. Really simple $1,000 trade right there. This is Canadian Chief. little bit more complex. It had a sell signal, then interrupted by a 2-day counter trend. Remember, this was a TO3 and a blue line sell signal. We expect the blue line signal to last a bit longer. You had a second chance to get into this, $1,200. Here's Euro Yen. Look at this thing, TO3 sell signal, straight down. I haven't put the dollar value on it, probably because there's one little counter trend in there at 157.29. Nice bit of trading there. This is Canadian dollar Swiss franc, CAD chief, TO3 and blue line sell signal. Means you can keep right down that it's a blue line and expect it to last a bit longer, as it does here with a 2-bar counter trend. I wonder if I've gone the wrong way. No, it's Euro JPY. I think I pressed the wrong button for you. Try this one. This is the Euro US dollar. TO3 sell signal, TO3 plus signal. It already made the turn right at 1053, etc. Straight down. British pound US dollar cable, they call this pair. British pound US dollar is called cable. One little sell bar down today, first from our sell signal, which was a TO3 and blue line sell signal. Conceptually, because it's a blue line signal, we can expect it to go a little further and last a little longer. Here's the Kiwi. This is unfortunately tied to the Australian dollar, which is dismal and looking worse, but for us we don't care. The lovely TO3 plus sell signal, key reversal bar right at the 57.65 blue line, down it goes, another $1,000 jumps in. USD CAD dollar, Canadian dollar, the loonie. This is called the loonie, is their mascot, their national bird, isn't it, the loonie? And look at this, TO3 plus buy signal, straight up, 1, 2, 3, 4, 5 days up, $1,400 just about. Lovely bit of trading Forex, as I've been saying to you. It has been quite marvelous. And here is one that we're waiting on. This is the dollar yen. And we've got a flip me buy just above Tuesday's high. Hasn't been elected yet. I do expect that it will be in the next couple of days. That's us, folks. If you haven't already had a free trial, please help yourself. Go to the website, www.thedanielcode.com. Click the free trial button. If you've had a free trial before, the computer will remember you and it won't want to give you another trial because it's mean. And contact Terry at support@thedanielcode.com and he will sort that out for you pretty quickly. What does a Mars say? Eccentricity orbits. Yes, quite, my friend. Your eccentric orbits. Okay, here we are. This is our disclaimer. I do urge you to be careful with trading. I don't know why we have to keep announcing this thing. I know that the regulatory bodies want us to, but honestly, if you didn't know how to drive and you got in a car and smashed yourself and someone else up, wouldn't be any surprise, would it? If you jumped in a pool and you didn't know how to swim and you were drowned, wouldn't be a great surprise. Don't do things you don't know how to do. In other words, trading is a skill. Learn to trade and you'll be safe and a profitable trader. But make sure you take the time to understand it does take a bit of effort and a little bit of time. Best thing you can do is take the Danielcode video trading course or the main course. I'd be happy to teach you. And you will learn everything worthwhile knowing about futures and Forex. Thank you for being with me today, folks. I've gone a bit too long. And here's Frank. Every webinar is a masterclass. Aren't you wonderful? Hey, what a delightful young man. Thank you, Frank. I love that. That's extra nice. All right. Enjoy your weekend, folks. I'm off the clock now. We've got my trades are on for tomorrow, which is my today. It's past midday here. It's Bloody Mary time and swimming pool time as well. It's a gorgeous day out there. I'll look forward to talking to you soon. Thank you for being with me. I'll say bye-bye for now. Goodbye.